Good morning, and thanks for tuning in. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. Asian markets are off to a muted start as the flip-flop on trade talks between the US and China continues. Speaking of trade talks, Chinese officials continue to deny any official communication with the US 24 hours after President Trump said that China made phone calls over the weekend to resume trade talks. Finance Minister Nirmala Sitharaman rebuffed the Congress party's allegation of the government stealing from the RBI's reserves, terming these statements as outlandish. And SEBI Chairman Ajay Tyagi warned mutual funds that they should stop compromising on safety for the sake of higher yields and play by the rule book. Let's talk about the US markets now. They gave up their early gains on Tuesday and ended in the red, and that's primarily because of the fading hopes of a resolution in trade talks and rising fears of a global economic slowdown. Sue Keenan of Bloomberg News wraps up Tuesday's Wall Street action in this report.
U.S. stocks closed lower across the board in the latest seesaw session on Wall Street, where headlines on the trade front continue to unnerve U.S. investors. We saw the dollar hold steady, bonds rose, but one strategist said what's happened on Wall Street between Friday and now has been head-spinning. His firm had forecast that things would likely get worse before they got better on the trade front, and it's their view we're still in the midst of that. On the stock front, Philip Morris, the maker of Marlboro cigarettes, confirmed that it is in merger talks and an all-stock deal to get back together with Altria Group after 10 years since the two companies split apart. This would be the biggest merger since AT&T bid for Time Warner back in 2016. Costco was another company that saw its shares rise after it opened its first store in China, in Shanghai. The crowds that swarmed on the store at its opening were so large it had to close early. There are many on Wall Street that say its move into China could be strong growth for the company. In terms of oil, it rose ahead of expected bullish supply data to be released later Wednesday. In New York, Sue Keenan, Bloomberg News.
Now, as the trade war between the US and China intensifies, one of the sectors that is impacted the most is obviously technology. And Apple continues to be in the firing line despite CEO Tim Cook's apparent good relations with President Trump. Apple co-founder Steve Wozniak spoke exclusively to Bloomberg Technology earlier today. And here is his take on the trade tensions. Listen in.
If wood is manufactured more efficiently in Oregon, I'll buy my wood from Oregon. And we never think there's anything bad about that. Why do we establish borders for countries? I think it's just politicians are in charge of a country and want their own domain to be important. So I'm more of a sharing, be very open in business and open to the world and try to find ways to cooperate and, reach agreements that way. But still, Steve, whoever does the best job is going to have an advantage in balance of trade.
You mentioned competition. That word's come up 2 or 3 times in your answers, and that leads me to wonder if competition feels significantly more fierce this time around, and if that's what's sort of driving some of the tensions or the trade. Are you worried about competition from a Samsung, from a Huawei, sort of encroaching on perhaps Apple or some of the big market share?
Oh, I've thought about that and seen, in my head many ways that it could happen and influence Apple negatively. But, I don't say that there's one logical rule that comes to one answer for all. I just happen to be more against competition. We're taught from the time we go to school, my school, right or wrong, my team, right or wrong, and that works your way up to my country, right or wrong. I'm more into thinking and determining what is right and what is wrong. And, also be liked by everyone. Why do you want to be, I'm going to be nasty to you, I'm going to hurt you, I'm going to, somehow throw my balance of force against you in a way? That doesn't make friends. We should try to be friends with all the countries of the world that are important, and certainly China's one of them. Now, as far as how it could influence Apple, well, everybody knows that a lot of the tech products, and especially things like smartphones and computers, the manufacturing shifted very much to China and the Shenzhen region, a lot of it in the world. Some of it's moving out to places like Vietnam now, but so what? That let us make products for a lower cost costs, and everyone who buys an iPhone pays less when it's that way. And so I don't see why do we have to say, oh my gosh, the balance of trade is going in their direction. That's very common, especially for companies that are at China's level on the development curve, towards being a real major force in the world economies. Look where they've come from.
Now, yeah, well, you can say that, but then China is apparently preparing for the worst on trade after President Trump's policy flip-flops keep both parties on the edge. 24 hours after Trump said that China called the U.S. to resume talks, Beijing continues to deny that any such phone calls were made. Tom McKenzie of Bloomberg News brings you the latest.
It's not just the switchbacks and the flip-flops that we've seen over the last few days from President Trump. It is throughout the trade war. The Chinese perspective is that they've been getting somewhere and then the US president has pulled back and hit them with tariffs. So it just builds the last few days in terms of the comments from President Trump on this sense of distrust, the sense that President Trump cannot be trusted, and even if you do get a deal, he may just rip it up and hit you again with tariffs. So it just feeds into the stance of the hardliners who say we cannot give any major concessions. We've got to be talking about ensuring that the party, that the government of China comes out of this with face. This is very much about the sense of national pride here as well, particularly as we lead up to the 1st of October celebrations here, celebrating the 70th anniversary of the People's Republic of China. So yes, the hardliners have been strengthened by the kind of comments that we've heard from President Trump over the last few days. Again, just as a reminder, on one day, Friday, calling President Xi an enemy of America, and then pretty much 24 hours later saying we're closer to a deal than we've ever been. So what it means in terms of the preparations for China, they are continuing to prepare self-reliance. That's what President Xi has said. He's called for more self-reliance. He's described and said that the Chinese people should prepare for a new long march. And we've got the preparations as well underway here for additional stimulus if we do get no deal, as well as a blacklisting of some US companies. That's according to officials here. It should be said, of course, that China still is continuing and was prepared to negotiate and talk with the US, and as yet we have not had a cancellation of these talks that could still happen in Washington, in DC. But certainly the preparations here are underway for a no deal, essentially.
One of the statements was about stimulus, and that's in fact something that's happening in major geographies around the world. Speaking about the US economy, former head of the New York Fed, William Dudley, invited a wave of criticism after he implied that Fed Chair Jerome Powell should not help President Trump by cutting interest rates to shield the US economy from the trade war with China. Kathleen Hayes of Bloomberg News brings you more on this story.
It certainly seems that way. One thing that's interesting is ex-Fed officials are usually almost as cautious in their remarks as they were when they were current Fed officials. Bill Dudley, of course, has played this game for many years. One of the top Fed officials during the financial crisis. He became New York Fed president in 2009 through 2018. Before that, he ran the New York Fed's important markets desk. Before that, he was at Goldman Sachs for years as a Fed watcher, as an economist. So when he makes a statement like this, he's clearly must have put a lot of thought into it and feels very strongly about what he's saying. Let's look at some of the key remarks from the op-ed he wrote for Bloomberg View, published today. First of all, he talks about the Fed acknowledging that it's hard to make monetary policy amidst a trade war, but he says the Fed could go further than acknowledging that publicly. Officials could state explicitly the central bank won't bail out an administration that keeps making bad choices on trade policy, making it abundantly clear that Trump will own the consequences of his actions. Bill sees three reasons this would be a benefit to the Fed. Number one, it would discourage further escalation of the trade war, and that would increase the cost of this war to the Trump administration. Second, it would reassert the Fed's independence, distancing it from the administration's policies. And third, it would conserve much-needed ammunition. Why go ahead and cut rates now because of the trade war when you might need it later when there's really a recession, et cetera? So that's his argument. Now, I think what really got people going, though, was when Bill Dudley moved even further on this, talking about what this might mean for the next election, how Trump is affecting the economy. Here's what he said that people also took great note of. Trump's re-election arguably presents a threat to the U.S. and global economy, to the Fed's independence and its ability to achieve its employment and inflation objectives. If the gold monetary policy is to achieve the best long-term outcome, then Fed officials should consider how their decisions will affect the political outcome in 2020. It was that last sentence. It seems to be saying that Bill should perhaps rein in Fed and help him not get reelected. We don't know for sure. I haven't spoken to Bill Dudley. However, that's how a lot of people read it. And I think that's why some people thought this may have gone a bit over a line.
All right. Let's not talk about lines in the sand for now. Let's talk about what you'll find in the headlines. Sue Keenan of Bloomberg News brings you the first word headlines.
We start with President Trump. He has returned from the G7 and wasted no time in resuming his attacks on the Fed. He took to Twitter to accuse Jay Powell, the chairman, and his colleagues of standing by and watching American manufacturers struggle with exports. He added that the rest of the world has long been taking advantage of the U.S. The Fed has been calling it wrong for too long. Former senior Fed official Bill Dudley, meanwhile, says the central bank should reject the president's demands for rate cuts and not bow to pressure to fix the damage caused by his trade war. Dudley was New York Fed president until last year. He said that by acceding to the White House, the Fed could end up just encouraging Trump to escalate the trade war even further. To China now. China has dismissed calls from Australia that it should release an Australian writer arrested on suspicion of espionage. Yang Henzheng was formally charged on Tuesday after spending the past 7 months in detention in China. His lawyer says the basis of the charge remains unclear. Yang has held Australian citizenship since 2002. China's foreign ministry says the case is being investigated according to the law, and Australia should not interfere. And finally, Hong Kong's former leader, Tsai Leung, is backing a bounty program for identifying protesters who have perpetrated vandalism and violence, including the defacing of Chinese flags and national emblems as unrest rocks the city. Leung Cheng-ying, who governed the former British colony between 2012 and 2017 and was empowered during earlier pro-democracy protests, posted a link on his personal Facebook page that promised a crowd-funded bounty and anonymity to potential tipsters. The website features requests for information on protesters who have lashed out at symbols of China's authority as demonstrations opposing Beijing's grip on the city continue. In Hong Kong, it is illegal to desecrate the national flag or emblem, with punishment ranging from a stiff fine to 3 years in jail. Here is a quote from the website, quote, "Since June, violence and unlawful behavior has seriously harmed Hong Kong." That's Global News on Bloomberg. Back to you.
All right, let's talk about the trade setup for the day in India now. Agam Vakil is here to tell you all about that and also what's happening in the futures and options space. Agam, we can't really say based on what's happening globally. How are we looking here in India?
Oh, well, some steady steps coming through for India, 2 straight days of gains. And, back on the back of that, we may very well see a little bit more strength come through. SGX Nifty currently indicating a marginal uptick. As far as trades yesterday is concerned, as I was suggesting, 0.5% gain for the indices, but the broader markets showed a lot more strength indicated by the gains here. The banking indices as well showed some support. Of course, the private sector bank wasn't, present in this rally, but where there could very well be a likelihood that that could play out in today's day of trade. That said, the ADRs are currently looking up, Tata Motors specifically, which is up 7.5%. And besides these ADRs, we have something like a Dr. Reddy's, which is marginally in the red for now. But as far as your fund flows are concerned, FIIs continue to sell in Indian markets. This time, another 924 crores of selling coming through. DIIs, on the other hand, coming in, taking the opportunity to buy into these markets. But as far as your contributors go, we had likes of ICICI Bank, HDFC, L&T and Reliance Industries for a change advance and helped keep the indices buoyant. As far as our futures and options go, again, a lot of traction with respect to futures. It is expiry, so we are looking at rollovers coming through at 33%. It was a fairly uncertain expiry, so we're going to have to wait and watch for whether or not we do see a pickup in the rollover. The Nifty banking rollovers also standing at 34%. In terms of open interest change, again, it's the 11,000 mark, which is the fulcrum. You do have 11,000 put as the one with the maximum open interest on the higher end, where it has it is the 11,200 calls. So 200-point range, but from now and tomorrow is when it's the expiry. A lot more writing, as I was suggesting, around the 11,000 put. But as far as your VIX is concerned, came off even further, down another 4%, now at the mark of 16. And the Nifty put call ratio also largely, well, around the same mark at around 1.2. IDBI Bank, it's moved out of the F&O ban. And moving on, we also have other stocks such as CESC, Grasim, and HPCL. We're watching out for that in terms of unwinding. And in terms of those stocks which actually saw a lot of accumulation in open interest, was largely the top Nifty companies which were gaining. So some of those stocks are possibly mixed moves expected today, Alex, but well, at least as far as Indian markets are concerned, the sentiment remains positive.
Thanks so much for that, Agam. Well, there you have it. That's the trade setup for the day. Do tune in over the course of the day and you'll find out exactly how the markets do start up. Let's move to something else now. Finance Minister Nirmala Sitharaman lashed out at the opposition for questioning the RBI's transfer of 1.76 lakh crore rupees to the government. Former Congress President Rahul Gandhi had tweeted during the day saying that both the Finance Minister and the Prime Minister were clueless of saving the economy from their self-created problems and are stealing money from the RBI. The Finance Minister termed the allegations as outlandish. Listen in.
The Bimal Jalan Committee had eminent experts in it. It was constituted by the Reserve Bank themselves and not by the government. They have had several sittings and have said or have come out with a formula. Like the committees which looked at the excess capital framework earlier. So this is a committee which the Reserve Bank appointed, had experts. They have given a formula based on which the amount is arrived at. Now, any suggestion about the credibility of the Reserve Bank, therefore for me, seems a bit outlandish, if I may use that word, considering the committee was appointed by the Reserve Bank themselves. They have themselves given an explanation yesterday, I think, through some media reports, that financial stability, surplus to meet any emergency and contingency have all been factored in by the committee when they arrived at the formulation of a formula. So, comments being given on the credibility of the Reserve Bank, I'm afraid, is commenting on the Reserve Bank itself and their selection of the committee itself and the committee independently arriving at a formula itself. And therefore, being a part of the government, it strictly may not be my business to talk about it, but it's very worrying that a committee appointed by the Reserve Bank of experts who have had several meetings and have come with a formulation is now being questioned.
Very strong rebuttal there. For now, let's turn to Somit Sarkar, who's joining me to tell you all about the stocks that you have to watch out for on trade today on account of them being in the news. Good morning, Somit. What's on your list today?
Good morning, Alex. On the stocks news, first let's start off with Yes Bank. Now, the company will consider raising capital on August 30th. Now, remember, this is the second fundraising that the company is planning to do. Earlier, they had raised close to 2,000 crore rupees. Second on the list is Oberoi Realty, where the company is saying that the IT authorities have left the building, left the company premises, and the company has now resumed normal day-to-day business activities. Thirdly, Power Grid Corporation will also remain in focus because the company has approved investment worth around 2,600 crore rupees to set up transmission systems for for the solar energy zones in Rajasthan. Now, the company is expecting this to be commissioned as by the end of December 2020, that is next year. Talwalkar Better Value Fitness will also remain in focus because the statutory auditor, that is M.K. Dandekar, has resigned, citing failure to receive satisfactory responses for their queries that they had put in forth in place of the management of the company, and because of this they have resigned as statutory auditors of Talwalkar Better Value Fitness. MEP Infra will also remain in focus because ICRA has downgraded its rating to A4 from A3 and has also withdrawn the ratings of bank limits worth nearly 50 crore rupees. Now, this is on account of slower than anticipated progress in the 6 under construction HAM projects that the company has undertaken. Now, this will result into significantly lower than anticipated gross billings, which means that the company's revenue and EBITDA could be lower in the coming quarters. Syntex Industries would also remain in focus because the company has made partial payment of nearly 46 crore rupees for its bonds and around 138 crore rupees for its outstanding principal amount that was pertaining to these bonds. IDBI Bank, now that stock will also remain in focus because S&P has placed its foreign currency issuer credit rating to credit watch with negative implications given the uncertainty regarding the bank's ability to meet its capital requirement in the next 3 months, and that's the reason they have put their ratings on negative implication. Lastly, a couple of bull deals that would keep the stocks in focus. Firstly, HDFC Life Insurance, where integrated core strategies have sold nearly 1.24 crore shares, that is 0.6% stake in the company. In Hero MotoCorp, the same party, that is integrated core strategies, has sold around 11.7 lakh shares, that is close to 0.6% stake, while in 1% Beverages, Baron Emerging Markets Fund have sold nearly 6.7 lakh shares, that is again 0.6% stake in the company at close to 16.55 rupees each.
All right, thanks so much for that, Somit. Concerns about the sustainability of the current Indonesian capital, Jakarta, has prompted the administration to search or hunt for a new capital. And they've zeroed in on one, and that's in the jungle-covered area to the east of the Borneo island. Take a look. For all fitness enthusiasts, especially those who love to cycle, they would surely want to pay a visit to Netherlands. The European nation has more bicycles than it has people, and it's now home to the world's largest bicycle park. Let's take a look. All right, now there's several stories that you can find on the website bloombergquint.com. In fact, I was talking about the one on Yes Bank that you should consider reading. There are a couple of others that I want to take you through. In a tough message for returns-focused mutual funds, SEBI Chairman Ajay Tyagi yesterday said that the industry has exposed its fault lines with several risky investments made for want of higher yields, and it is high time for them to play by the rule book and stop compromising on safety. In corporate news, Rakesh Gangwal, co-founder of Interglobe Aviation, skipped the company's annual general meeting even as the management tried to reassure shareholders that its two promoters, who have publicly been at loggerheads, are working to resolve corporate governance issues. The chairman of the board, M. Damodaran, said that the promoters have been speaking to each other and there will be a solution over time. And meanwhile, Chief Executive Officer Ronajay Datta said that the airline has not found a single related party transaction that wasn't at an arm's length or not in the interest of the company. That's all you need to know going into trade today. Do stay tuned. There's a lot more coming up in just a short while. This is Bloomberg Quint.